What's going on in Edmonton's real estate market for the month of July? We're going to talk about that in this video. So Edmonton's summer has been pretty mild in temperature in my opinion, and what about the sales? Are the sales mild or are they hot? And if you take a look at last year compared to this year, I definitely think we have a much more of a quieter market than we did last year. Now things are still moving and selling, we're still seeing multiple offers, but we're not seeing the same degree, we're not seeing that same sense of urgency, and we're not seeing as many multiple offers. So what do you need to know as a buyer, seller, or a homeowner when it comes to Edmonton's real estate market? Well, first of all, let's take a look at the July market in terms of how many new listings came onto the market. We had 3,216 listings that came on the market, which was more than last month. So we got more listings in July than we did in June. And compared to the last year, like of July, we also had 22% more come as well. So if you take a look at the year to date, we've had 19,000 listings. So we've had more listings come onto the market compared to last year. So if you are a buyer, you're noticing you have a bit more choices and you're not needing to rush as quickly, again, depending on the pricing and the area, but you have a little bit more room to breathe when it comes to looking for homes and buying a house at that pace. As a seller, you have to be a little bit more patient now because things aren't going to move as quickly, but they're still moving. So if your property isn't moving after some time, you need to take a look at your pricing strategy and your marketing. Now, something to consider as well is anything under 600,000 should, in my opinion, be selling less than 30 days still. Anything over 600,000, that's all going to be dependent on your area, your price point, and like the type of home you've got and the condition that your home is in. Those are all like big overarching comments I'm making, but just so you have a gauge in terms of how long should I be waiting before my house doesn't sell or does sell. Homes over $1 million is also an interesting category because between the 1 million to 1.23, it's very quick moving still. But anything over 1.5 and even over 2, it's just very, very quiet and more competitive because you've got even more choices and there's not as many buyers. Now let's take a look at how many buyers are there when it comes to the average price in all of Edmonton. What did the sales look like in the month of July? So in the month of July, we saw less sales compared to June and compared to last year. You're looking at just slightly under 1.6, so it's not a huge difference between June to July sales. But if you take a look at 2024 and 2025 sales, you'll see that we dropped by 3.4%. Doesn't seem significant, but it is of note. When you watch our videos that we talk about each week on live, I do talk about how our sales continues to drop compared to what it was last year. And because the sales have become lower, and the inventory is higher, like the amount of sales, and that's how our market is shifting. And that's why we're no longer in a hot seller's market. We're moving slower and closer to a balanced market. If we continue down this trend, we could end up moving into a buyer's market where there's more listings for sale than there are buyers, to an even more skewed view where it actually becomes to the advantage of the buyer because there's just not as many people buying anymore. Now that hasn't quite happened yet. We're definitely still in a balanced market. If you take a look at the number of actual sales versus percentage, you're looking at just under 2,000 sales for all of the properties in Edmonton. And if you look year to date for sales, you're looking at just over 12,000 sales. So 12,000 sales year to date versus the 19,000 have come on the market. That number is still pretty close together. When you start to see a bigger and bigger spread, that's when you're going to start to see more of a balanced market and almost a buyer's market. If you take a look at the number of homes for sale on the market, single family, condos, everything, right now in Edmonton, we have 5,323 properties for sale. That was for the month of July. If you didn't add any more new listings to that, and you took the amount of sales that we have in terms of the action, it amounts to 2.7 months of inventory. It would take 2.7 months to sell all of the homes, and that gives you this rate. Now, 2.7 months is still very much a seller's market. When you're hitting the 3.5, 4.5, 5, that's when you're balanced. And then over 5 is now more of a buyer's market. Now, this is for all properties. If you were to take that and just look at your specific area, your type of home, that number is going to change. So that's why you need to make sure you figure out specifically for your neighborhood, what does that look like? So the average days on market for detached single family homes is just 30 days. So this year we're just slightly faster than last year at 31 days for detached home. For semi-detached, you're looking at 29 days versus 26 last year, 29 days for row townhouses versus 31 last year. The apartment condos is taking slightly longer at 47 versus 44, but that's substantially lower than in the past years prior to all the peak in the pricing. It used to take well over 60 days to sell a condo, if not even longer. Now, when you're taking a look at all residential, they've got the average days on market at 34 versus 33 last year. So nothing too crazy, but it is trending to be taking a little bit longer. And I foresee that moving into these fall months and winter months, it's only gonna be the same or potentially longer. Next spring, we'll kind of see what's gonna happen, if things are gonna speed up or not. So what about the average price of homes? Now, if you take a look at all of Edmonton, we're looking at an average of $432,000. Now, that is quite of a low number, and if you take a look at it, it's a little bit higher than it was last year, but this is everything. This is from condos to single family to the high-end properties. So you can see that it's a bit of a skewed number. If we just take a look at the average price of detached homes, you're looking at $569,000, which is quite expensive. If you've been following me along on this journey for a few years, you'll know that it took forever to get to 500, and then as it continued to climb, it just continues to go up. Now, compared to last month, it's only a 1.2% difference, but compared to last year, it's a 4% increase. Now, if you're following me last year we were going up, and we had around a 10% increase in total for last year, but this year we're at 4% and we're in August. So I don't foresee that number bumping up into the double digits this year. We might land at 4 or 5%. Probably going to be staying at this 4%, honestly, is what's going to happen. And so if you look as a homeowner, you're thinking, how much did equity go up this year compared to last year? You still gained this year, but not as much as last year. So similar to watching stocks, sometimes your stocks go up really high one year and they stay the same, or they go lower. This year, it looks to be like you're still going to have an increase, but just not as big as last year. Last year was an anomaly, and the typical normal is 1 to 2% in Edmonton. So we're still slightly higher than that. If you take a look at the semi-detached homes, that price point is at $431,000 for average, just 3.6% lower than the pricing from June, and higher than last year by 6.6%. A lot of demand in this area because as prices go up, then affordability goes down for some people and they move into these semi-detached homes. They'll also move into the row townhouses, which is now $290,000. But why the significant drop? These townhouses can have condo fees. That price point of $290, I'm pretty confident is condo fees. The townhouses with no condo fees are upwards in the 300s, 350s. So you have to take context in terms of what area and what type of home you're looking at. So what does this all mean for you if you're a buyer, seller, or a homeowner? If you're a buyer, you want to still do what you always should be doing, which is getting all your ducks in a row and talking to your mortgage broker to make sure you've got your rate locked in. And even if it does go down, then you have the cheaper rate. So if it drops down, you get that lower rate. If it goes up, you're protected. You also want to make sure you have all your pre-approval done, because when you do find that house, like there's not very many homes that are going to be in that price point. You could be competing, or you could also just be ready to make a very attractive offer to move that home off the market. Sellers, you need to readjust your expectations on what your house is worth. What are you willing to do to the property? What are you willing to do for the price? And what is the market willing to pay you? You need to take a look at all those things and consider that. Don't compare it to last year or last 6 months ago, because that pricing has changed, the market has changed, and you need to price accordingly. Otherwise, your home could sit on the market for quite some time. Now, for homes over $600,000, you need to sit down with an agent and really figure out a pricing strategy and adjust your expectations as to how long to expect your home to take to sell. If you're over $1 million, that's definitely a much longer game than it would be in the under 600, which your home should move in 30 days. So if you're looking to buy and sell, like you're moving up, then you need to take a look at that strategy. Moving down, well, not down, but just right sizing yourself. You also need to look at that in terms of where you're selling, where you're moving to, what the demand is in each area. If you're a homeowner, in general, your property value has gone up from last year. If you bought this home just a few years ago, it's not quite time to sell yet, because even though the price might look higher, don't forget about all the closing costs when it comes to selling. If your mortgage is coming up for renewal and you're at the 5-year mark, you likely have made money. And if you've been around for 10 years plus, you for sure would have made money. Now, it depends on how much you paid for the home at the time. Sometimes people just assume because they've been in the home a long time. You have to remember that if you ended up overpaying at the time, that your equity growth won't be as much as before. So make sure you tune in to us on Tuesdays when we talk live about those specific areas. If you have any requests for communities in the West and Southwest, we can dive in and tell you what those neighborhoods are doing, how quickly homes are moving, what the average price is, and if you need to be considering if it's a seller's market, buyer's market, or a balanced market in those areas. Thanks so much for tuning in.